One of the biggest cliches that I hear about talking with investors is the notion that real estate is boom bust, that I can just wait for the next crash and real estate prices are going to come down and I'm going to buy low, sell high, make a killing. And I'm here today to tell you that unfortunately, that's not how it works. Real estate is not like the stock market. It is not boom bust. It's not peaks and valleys. It's more akin to a staircase where you have moments of appreciation and then the market stabilizes a little bit due to supply and demand. Now, there was a crash where prices did go down, and that was the last one. That's probably why we're so concerned, because that recession is still fresh in people's minds. But for a lot of reasons, 2021 is not 2007. The prices that we're seeing are substantiated by real income, by real gains, and there are a lot of other factors too. For starters, lenders are significantly stricter and they're more highly regulated. We don't really have subprime loans anymore. Most everyone is on your standard 30-year fixed. People actually have to document their assets and their income. So some of you may remember back in 2006, 2007, there were things called stated income loans where you could literally talk to a lender and say, I make $100,000, and they would just give you a loan. Try telling an underwriter that today. Everything is significantly more documented, and all the more so if you're trying to purchase an investment property, because usually for 2 to 4 unit properties and more, you've got to document that you have cash reserves, sometimes up to 6 months or more, to prove that inevitably when there are things like rent increase moratoriums or other COVID regulations or just things breaking down, inevitably, you have the reserves to pay for it. Finally, recessions don't typically drop real estate prices. We've had about 6 ever since the 1970s going into 7. And out of those 6 going into 7 recessions, do you know how many we've actually had real estate prices drop in? Just 1. That was 2008, and that was because real estate caused it. So what this all means for you is if you're thinking of investing, don't base your decision on this notion of a boom-bust cycle. Base it on the long-term viability of an area or the product type that you're looking at, and just finding good numbers at the time of purchase. And if you're curious about what that means, about what good numbers even mean, or anything else, give me a call or an email anytime. Happy to talk more with you about it.